HSBC India Export Opportunities Fund. Will investing in this NFO help you in your wealth creation journey in the long run? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a more faster and smarter way. But before analyzing whether this NFO will be a good fit for investment portfolio or not, let us first understand a few basic details about this NFO. So as an NFO, it starts from 5th September 2024 and ends on 19th September 2024. And some of its key features are it belongs to the category of equity scheme thematic, and it is an open-ended fund type which has Nifty 500 TRI index as its benchmark, and the minimum amount you need to start investing in this fund is just 5,000 rupees. And the fund manager for this NFO is Mr. Abhishek Gupta, and there is no entry load, but you do have an exit load which is 1% if you redeem it within 1 year. Now let us take a look at the investment philosophy and the investment objective of this fund. So the investment philosophy is it aims to invest in opportunities which are engaged in or expected to benefit from export of goods and services. Like the objective itself is to generate long-term capital growth for the investors from an actively managed portfolio of equity and equity related securities of companies engaged in or expected to benefit from export of goods or services, as this is a thematic fund which focuses on the export opportunities in India. So from learning about the investment objective and the investment philosophy of this fund, we can know that the suitability for investment in this fund can be for aggressive investors who are already bullish on the new trends and emerging sectors. Like if you are very interested in the export opportunities in India and you're very aggressive investor who's willing to be bullish on investing in this theme, then this might be suitable for you. So now let us move on to the in-depth analysis of whether the HSBC India Export Opportunities Fund will be a good fit for our investment portfolio or not. How we are going to do that is by analyzing the pros and cons of investing in this NFO. So first let's take a look at the pros. So in the pros, you have focused exposure. So thematic funds like this is all about specialization. So this fund especially targets export opportunities in India. So you get concentrated exposure to this specific sector. So if you believe in India's export growth potential, this could be a great way to capitalize on it. Next is the diversification within a theme. So even though it's focused on one theme, the fund typically invests in a range of stocks within that sector. So you're still getting some level of diversification which can help spread out your risk. And also another advantage is capitalizing on the macro trends. So if the broader economic trend favors exports or the Indian economy is booming, then this fund could potentially see significant growth. And next advantage is the expert management that comes with a thematic fund like this, because a thematic fund are managed by professionals who specialize in that particular area. So this expertise could lead to more informed investment decisions. And next we have the innovation and growth advantage, which these funds especially often invest in emerging sectors or innovative companies, giving you a chance to be part of the next big thing. So if you choose to invest in it and the new trends and the emerging sector like the export opportunities India definitely performs well and delivers, it can definitely boost the overall returns in your investment portfolio as well. So this NFO thematic fund like this applies the high risk and high return concept. So that means if you choose to invest in it for a long term period, and the more higher you risk you take, the higher potential returns you can get from this fund. So as it involves high risk, this might be suitable for aggressive investors who are bullish on the new trends and emerging sectors. So now let us take a look at the cons of investing in the HSBC India Export Opportunities Fund NFO. So one of the major drawbacks is a niche focus risk. So this fund has a narrow focus on the export opportunities in India, right? So that means it is more vulnerable to downturns in that specific sector. So if the export sector especially underperforms, then your investment might take a hit. Another thing is the market timing, which kind of correlates to the previous point, because the thematic fund can be very sensitive to market trends. So if the theme is out of your favor, you might see significant losses as well. As I have already said, is that it only focuses on niche area, right? So if the market timing is not favorable to that niche like this thematic fund, then we might take So we might take some significant losses in our investment portfolio. So another thing is the higher cost. So these thematic funds sometimes come with higher management fees due to their specialized nature. So you need to be sure of the expense ratios before investing. Another drawback is the limited diversification. So if you compare it to broader funds, these thematic funds might offer less overall diversification, which might increase the risk in your investment portfolio. And there's also the market sentiment dependency. So thematic funds can be very volatile since they depend on the investor sentiment and specific trends, right? So if the market sentiment shifts, then the fund could also experience significant ups and downs. So overall, it completely depends on how the market is favoring this trend, and we do not have the guarantee, or we do not have the capacity to predict how the market will treat this fund. So in a thematic fund, it's the major drawback, because we can't predict how the market will shift. So we do not know when this fund theme will be favorable or not. That also is a major drawback, because if the new trend and emerging sector like the export opportunities in India underperforms in the market, it will definitely impact the overall returns your investment portfolio as well, because it has the highest concentration risk, because it predominantly invests in the export opportunities, right? So there is that. So to invest in a thematic fund like this and to gain better returns or potential better returns is by timing, and the circle of competence should be on our side, which is kind of hard to predict since the market is highly unpredictable. So these are some of the major drawbacks of investing in a thematic fund like HSBC India Export Opportunities Fund, NFO. So what is the final takeaway from our analysis? Should we invest in the HSBC India Export Opportunities Fund or not? Is it worth investing? As we can see from our analysis, this is not a very beginner friendly fund to invest, and it also poses a lot of high risk, right? So if you're an investor who's just starting out in your investment journey, like you're a first time investor, and even if you're a conservative investor who's not willing to take a lot of risk, then this might not be a suitable fund for you to start investing in. So you can definitely avoid investing in an NFO like this. But if you still want to invest in a thematic fund like this, then you need to know that there are other existing new trends and emerging sector fund with a track record out there in the market. When you invest in a fund with a proper track record of at least 7 to 10 years, you know it has been in the market when the market cycle also has completed in the 7 to 10 years, and you can better analyze how it has performed in the highs and lows of the market. So you can take a calculated risk. But here, investing in an NFO like this is taking a blind risk, which you do not want, right? Because it is highly risky to take a blind risk, because we do not even know how much risk we are taking, and later on, if this underperforms or if it's not performing well at all, it will definitely impact the returns on your investment portfolio as well. So it's better if you choose a safer option and you choose to invest in a fund with a track record where you can take at least a calculated risk. And also, this fund is not suitable to invest or add to your core investment portfolio, because as I have already said, this is an NFO. We do not know what kind of risk we are taking. We do not have the proper portfolio track record for us to conduct a proper research on it, for us to take a calculated risk, right? So if you're investing in this, it's a blind risk, and your core investment portfolio is there for you to achieve your main financial goals. So if you add this fund to your investment portfolio and it performs really badly, it can definitely impact the returns in your overall investment portfolio, which can impact your accessibility to achieving your financial goals as well. So it's better if you do not invest in this fund and add it to your core portfolio. But if you still want to invest in it just to see how it will perform, then, and you also have some surplus money, then you can invest it through your satellite portfolio with a minimum investment amount when you're starting out on a trial basis, just for an experimental basis. And later on, if this fund performs well after a few years, then you can definitely increase your investment amount, and little by little, depending on how much you want to invest. But when you're starting out, it's better if you invest it through surplus money from your satellite portfolio, only with a minimum investment amount on a trial basis. So that might be a suitable option for investing in an NFO like this. And especially, it's not suitable for investors who does not know how to enter and exit from new trends and emerging sectors. Like if you want to invest in a thematic fund, you need to know when to enter and exit properly to gain the maximizing the potential of that fund. But if you do not know how to predict the market, or you do not have sufficient knowledge of the market to predict it, the circle of competence should be on on your side for you to achieve better returns, right? But if you do not have that, then it's definitely not suitable for you to invest in, and you can avoid investing in that. But if you're still finally, if you want to invest in it or not, it all depends on what kind of investor you are, or what kind of time horizon you have for investment goals, and what is your financial goal. It all depends on that. And if you're still struggling to choose suitable investment options for your investment portfolio, you can definitely consult a professional financial planner, like a certified financial planner, who will be able to professionally guide you through looking at the suitability of the investment objective, risk profile, overlap ratio between your investment portfolio and the investment portfolio of the fund you want to invest in, and what kind of allocation you want to give to this fund in your investment portfolio. They will be able to look at all factors and customize and personalize your investment journey with investment strategies, especially for you to maximize your potential and achieve your financial goals in a more faster and smarter way. So definitely investing via a professional guidance like a professional financial planner will be very helpful for you in the long run and make way for a better financial future. So you can definitely consider investing through professional guidance as well.